We got to talk about this next story. Nordstrom in the red after the company announced that the 2022 holiday season sales were down 3.5% year over year. The retailer also slashed full year EPS guidance from $2.30 to $2.60. That was the range previously. It's now down at $1.50 to $1.70 here. And so, you kind of look through what the company had said in tandem with this. Net sales decreased actually 1.7%. Nordstrom Rack, that decreased 7.6%. And they said that the holiday season was highly promotional. Sales as well, softer than pre-pandemic levels. And they're continuing to say, at least, that there's greater resilience in their higher income cohorts. But consumers are being more selective with their spending, given the broader macro environment as well. That's quite the acknowledgement from the company.
Yes, and it's an acknowledgement that's being echoed and reverberating through the analyst community. I got some notes here from the street, and let me just begin with Bloomberg Intelligence. Nordstrom's pre-announcement that it missed on 2022 adjusted EBIT margin due to bigger markdowns. It just shows the need to up its game. It needs to up its game against Macy's and some of the other retailers. Now, here's Jefferies. They hold the stock with a buy, recommended with a buy, price target cut to $22 from $24. And they say, while Nordstrom's profit reduction for the fourth quarter is, quote, disappointing, is based on temporary factors. And they're also noting that promotions weighed on margins. This is a very common theme that we heard over the holiday season. And we're probably going to hear a lot more of this as retailers report. This is a pre-report here. Also, this is Jeffrey saying investors should focus on Nordstrom's better inventory position. And I think that's going to be key for a lot of retailers, which is important for driving sales and margin performance in 2023. So all in all here, I think last year I talked about quite a bit about the bifurcated market in retail and how electronic retailers had fallen behind over the last 2 months. Well, that's it looks like that slump is over and we're in this new phase here. And when you get down to the brick and mortar shops, if they haven't figured out how they're going to compete in this new environment and they haven't gotten their execution down pat, then they're probably going to be left in the dust, because I see this a more challenging year, perhaps at least equally challenging as last year.
Well, this just adds to some of the guidance that we had received ahead of the ICR conference. So you'd seen that come in from Macy's and updating some of the expectations there. And you're seeing Macy's move lower here during today's session by about 0.7%. And then additionally, we had seen even some of the guidance revisions from Lululemon and guiding for lower margins. And so with that in mind, even among some of the higher income cohorts of the consumer out there, they are signaling that there's more of a value kind of determination that they're making with every single purchase to figure out exactly whether or not it's going to be beneficial, or you need to get, that another pair of ABC pants from Lululemon, or if you need to get something from, I don't know, Nordstrom at this point in time. But it really does point back to some of the data that we had seen come out earlier this week as well within some of the department stores data. The department stores were actually the biggest decliner in the retail sales month over month, led the declines. It was down by about 6.6% from November of 2022. And so that really kind of giving us that tee up to now what we're seeing show up in some of the revised guidance from companies including Macy's, Lululemon, as mentioned, and now today Nordstrom as well.